This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
U.S. President Joe Biden's administration imposed its broadest package of sanctions so far targeting Russia's oil and gas revenues on Friday, in an effort to give Kyiv and Donald Trump's incoming team leverage to reach a deal for peace in Ukraine. The move is meant to cut Russia's revenues for continuing the war in Ukraine that has killed more than 12,300 civilians and reduced cities to rubble since Moscow invaded in February 2022. Ukrainian President Volodymyr Zelensky said in a post on X that the measures announced on Friday will deliver a significant blow to Moscow. The less revenue Russia earns from oil, the sooner peace will be restored, Zelensky added.
Oil prices rallied nearly 3% to their highest in 3 months on Friday as traders braced for supply disruptions from the broadest U.S. sanctions package targeting Russian oil and gas revenue. President Joe Biden's administration imposed fresh sanctions targeting Russian oil producers, tankers, intermediaries, traders and ports, aiming to hit every stage of Moscow's oil production and distribution chains. Brent crude futures settled at $79.76 a barrel, up $2.84, or 3.7%, after crossing $80 a barrel for the first time since October 7.
Moving on to the top news in the energy sector.
The U.S. is expected to release by next week a climate model for clean fuel tax credits that will sharply reduce the ability of ethanol producers to access subsidies for production of sustainable aviation fuel, three sources familiar with the matter told Reuters. The exclusion of climate-smart agricultural practices, which the biofuel industry were hoping to rely on, represents a reversal from the last update of the climate model. U.S. Treasury is expected to issue a notice for proposed rulemaking on the broader program, known as 45Z. The updated climate model would also limit the pathways for credits for used cooking oil imports, two of the sources said. Both used cooking oil and ethanol can be used in production of SAF, which is made from non-petroleum feedstocks and has a smaller carbon footprint than traditional jet fuel.
U.S. energy firms this week cut the number of oil and natural gas rigs operating for the first time in 6 weeks, energy services firm Baker Hughes said in its closely followed report on Friday. The oil and gas rig count, an early indicator of future output, fell by 5 to 584 in the week to January 10, the lowest since November. In past weeks, the rig count remained unchanged for a record 4 times in a row. Baker Hughes said this week's decline puts the total rig count down by 35 rigs, or 6%, below this time last year. Next, we have the top news in metal market. Indonesia has set a quota of around 200 million metric tons for nickel ore mining this year, a senior mining ministry official said on Friday, adding this could be cut if miners failed to comply with environmental and other rules. We have issued around 200 million tons. But if based on their performance evaluation, especially post-mining reclamation and environmental management, we will cut, said Tri Winarno, Director General of Mineral and Coal at the ministry. Energy and Mineral Resources Minister Balo Lahadalia said last week that the Southeast Asian country, one of the world's biggest producers of nickel products, was reviewing its annual nickel ore mining quota, seeking to prevent further price falls.
Benchmark copper prices touched the highest level in nearly a month on Friday, propelled by firmer demand in top metals consumer China, while U.S. prices narrowed their premium over London ahead of expected U.S. tariffs. 3-month copper on the London Metal Exchange was 0.1% higher at $9,090 a metric ton by 1700 GMT after touching the highest since December 12 at $9,145. The broader backdrop looks slightly bearish, but China looks good, actually, in terms of demand for base metals at the moment, so that's probably helping to push prices up a bit, said Dan Smith, head of research at Amalgamated Metal Trading.
We will now look at the top news in the agricultural sector.
U.S. farmers produced less corn and soybeans last year than previously expected, the U.S. Department of Agriculture said on Friday, sending crop prices higher as the agency slashed output estimates following a dry end to the nation's growing season. Corn futures climbed to their highest level since May at the Chicago Board of Trade as the agency also projected that global supplies of the grain will drop to a decade low. Tighter supplies reflect reduced U.S. output and resilient demand from importers and livestock producers after corn prices fell last summer to 2020 lows.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.